Hello, in this video, we're going to be looking at whether you should buy Tesla stock still. Is there still a buying opportunity for Tesla, or is it really too late for you to buy Tesla? For those who don't know, Tesla used to be at about $200 to $300 per share. However, in recent months, it has climbed to over $900 per share. However, it has collapsed to about $500 per share, which has potentially created a buying opportunity for new investors who missed out on Tesla stock when it was only at $200 per share. First off, we have to address that Tesla is a fundamentally amazing company. They have autopilot technology that is years ahead of their competitors, which is amazing for the company because it will allow them to really keep their market share and get new customers because their product and car is just so much better than a lot of other cars in the market. Also, their business model is really good. Unlike many other car makers, Tesla sells their cars on their own website. This is really important. It allows customers to customize their own perfect car. It allows customers to choose their colors, wheels, and many other customizable options on their website so that they can create their own perfect car. If a customer wants to buy a car from another car maker, they have to go to a dealership and hope and pray that they have the perfect car for them. This makes it really hard for other car makers to sell their car. This is just going to make it so much easier for Tesla to grow in the future because they can offer customers their perfect car, while at other car makers rely on dealerships where customers just have to pray that they have their perfect car. Also, Tesla cars are starting to come in a really good price range for consumers. According to the Motley Fool, Americans spend on average $31,000 and their Tesla's Model 3 is in the price range of about $35,000 on the low end. As Tesla brings the price of the cars down, it's going to be really easy for consumers to actually start to buy Teslas because they're going to be really affordable. Also, what a lot of investors forget is that when you buy a Tesla, you get access to a lot of tax credits depending on your state because it's an electric car. It's also going to help bring down the cost of buying a Tesla electric car, making it more affordable to consumers way into the future. Now that we have determined Tesla is a very good company fundamentally, we have to take a look at their valuation to make sure that they're trading at a good stock price. In order to determine whether their valuation is good, we're going to look at their forward PE ratio, which is the price to earnings ratio using their expected earnings per share in the coming year. If we take a look at what analysts are expecting Tesla is going to make in earnings per share this year, on the low end, we have $3 per share. On the average end, we're seeing about $8 per share. And on the way high end, we're seeing about $14 per share. If we take Tesla's current stock price and divide it by their expected earnings per share on the low, average, and high end, we get PE ratios of 142, 57, and 32. All of those are drastically different because we're using different expected earnings per share to calculate their forward PE ratio. And I'm going to be honest, the low end of the forward PE ratio seems very inaccurate because it only estimates that they're going to make $3 in earnings this year, which seems way off because the last 2 quarters they have made $2 per share in earnings. Making only $3 in earnings this year seems way off. So really their forward PE ratio is going to be closer to 57 or 32. If we use their expected price to earnings ratio and divide it by their growth rate, we're going to get the price to earnings to growth ratio. And in the future, Tesla is expected to grow at about 35% per year over the next 5 years. If we use that information to calculate a price to earnings to growth ratio, we get a PEG ratio of 1.6 using their average expected earnings per share and a PEG ratio of 0.97 using their less conservative and more conservative earnings per share estimate. We get a price to earnings to growth ratio that indicates Tesla is actually at a good valuation. The price to earnings to growth ratio of 1.6 is actually indicates that the stock is fairly undervalued. However, I would still not buy Tesla stock right now, and here's why. Since stocks have fallen dramatically in recent weeks, I would recommend buying stocks that are actually more undervalued. You can get stocks for PEG ratios of under 1.5, a lot of them are. There are a lot of stocks out there who have a PEG ratio at about 1 using their more conservative expected earnings estimate, which is actually indicates that there are a lot of other stocks which are way more undervalued than Tesla. So I would really recommend investing in other stocks, even though Tesla is not a bad investment. And I believe if you really did invest in Tesla because you really wanted to, you would still make money on the stock. I hope you enjoyed the video, like, subscribe, and let me know in the comments what do you think about Tesla.